Good morning and welcome to Equity Story TradeWatch, the Wednesday, 9th of August, middle of the week. And of course, I'm here with Claude. Good morning, Claude. Thank you for joining me. We're starting a little bit early today. I just need to finish a little bit early with the TradeWatch. So the markets are not open yet, but I'm going to talk about what happened last night, of course. We're going to talk about a couple of announcements this morning, and it's been actually fairly quiet. And then we're going to go through our thought of the week, which again, we're focusing on the same theme as last week, which is which companies are going to report well. Before I start, we've got the Equity Story disclaimer in front of you. Of course, it's always general advice, and any story we talk about is based on technicals and fundamentals only. So let's start with last night's events, and I'm going to quickly switch the screen, of course, just to make sure that we are looking at the right things. And let me just get that going because, of course, here we go, new screen. And I want to show you last night's events. Here we go. So NASDAQ, that was down, well, roughly 0.5 and 0.8 from NASDAQ. Two things going on here. Markets, I mean, according obviously to marketing, but you can see, you can read through what actually happened last night. Moody's bank downgrade. So the small banks, regional banks in the US were downgraded, credit ratings. And then China's weak economic trade data came out as well. So I think there's a summary which we'll actually go through right now, and I'll show you what the depressing trade data, they call it. What happened was trade surplus fell 21% year on year. That's not good. Exports plunged, imports fell, exports to US down 23% and Europe down 20.6%. And manufacturing flagged the fourth consecutive month of contraction. Now, it's not great, obviously, for the economy of China. Then also, we've got the CPI China details coming out as well. They're expecting deflation, right? I mean, that's how bad it is in China at the moment. And it can be bad and good at the same time. The bad stuff, of course, is that potentially consumers are going to probably thinking, okay, it's deflation, we might hold off on not spending. Plus, also, if you're owning something, and you're probably going to feel poorer because if it affects your particular asset, like, you know, property, whatever, it's not great, right? So that's the bad thing. Of course, the good thing might be is that you might have more spending power in a way if certain things work out in your way. So it will be interesting. You you want to have a slow inflation periods at all times. That's why, you know, a lot of the banks, the global banks out there, central banks want to have 2%, 3% tops on a yearly basis. But obviously, China's going through a pretty poor patch. So it'll be interesting to see what they do, how they're going to come out of it. But it's affecting global markets, and unfortunately, it's going to affect us as well here. I think our futures are fairly even at the moment. So we'll see how the market does. But it's just looking another pretty poor week. We had a pretty poor week last week. We're having another fairly uninspiring week this week. So that's what's happening overnight in the US. Now, just quickly going through the commodity side of things. Again, very depressing viewing, I have to say, apart from oil and gas, right, and coal. So we've got crude up about 1.8, 1.5 for Brent, gas up 9% for the week, coal up 4% for the week so far. I mean, that's obviously looking pretty good. And uranium slightly edge up, right? Then you go through the gold depressing, silver down 6%, gold down 1%. Then you even go further down of iron ore down 6%. So you can see we are going to get affected by our miners, which has dominated our ASX for a long time now. So you go to lead, aluminium, all that stuff is down. Not great reading, right? So no joy, unfortunately, from there apart from the top bits, which is the oil gas. So maybe Woodside, maybe Santos and stuff like that you can have a look at. So now I'm going to switch again screens to go through and have a look exactly what's happening on ASX. And I'll show you that screen right now. If you just give me a sec. So share the screen right now here. Okay. And we've got XJO, right, which is the ASX 200. You can see a couple of weeks down, not great looking. I'm going to quickly put in a WDS so you can have a look on the back of the prices, what's going on there. And you can see that's probably why it's looking so good. Santos probably fairly similar as a trade, as an investment, maybe for the short to medium term. Looking at this is slightly maybe just turning, maybe a little profit taking after a pretty nice, strong about 3 or 4 weeks. But generally speaking, you're not too much joy not much too much joy at the moment. They were pulling back for a couple of weeks, but I expect it to sort of swing back again if the oil and gas prices keep going on the upwards trajectory. So just moving on from that to some of the announcements this morning, and there wasn't too much. Like I said, it's still fairly quiet reporting season. I don't think we're going to crank up till probably tomorrow. I think there's more coming out. So let's have a look at the two that have reported. And the market hasn't opened yet, so we can't see the reactions, what's actually happened. But CBA came out with their announcements, and I think it was decent. I think the only thing was their margin slightly contracting in there on quarter, but year on year, it's actually expanded, which is nice. So this is the margins for CBA. Now, the other one was Suncorp. That was a very, very good result from Suncorp, I have to say. Now, again, it all depends what's actually happening from what the expectations were from the brokers out there. So at the end of the day, it's had a really good run. It had a bit of a pullback, Suncorp, of course, but just want to see what the reaction is from the investment fraternity out there, because they're ones that are, they're probably looking at and have got sort of numbers they're looking for out of Suncorp. But generally speaking, those two are okay. The only other couple I want to quickly mention is XAM came out with some drilling results, and it has been a very, very good share price rise. So I'm just wanting to see what the reaction is to those results. For me, just looking at it without knowing what the reaction is going to be, they're okay, but nothing spectacular, right? So I don't know, maybe some profit taking. We'll see what the market reaction on that one is. And last one is Sezzle, just going on that buy now, pay later space. Not much exciting still. You can see it's just floundering below. So really not much joy on the technical side of things, but maybe we'll have a positive reaction because I think they have improved the bottom line. They're finally going into positive cash flows by the looks of things. So we'll see how it goes. All right. So from there, Claude, now you're going to come in here with me, please, because I don't want to talk too long. I want you to have your moment in the sun. So we talked about last week about stocks that are hopefully going to report well. So we talked about car sales. I know you talked about CNW, and they've actually come out with CNW. So well done to you on that. That was a decent result out of CNW. But we've got a couple of new stocks to talk about. Not new as in we've never talked about them, but a couple of new stocks that we want to talk about that possibly can report pretty well. So the market's just open, but let's talk about those two stocks, and we'll have a look at the markets afterwards. I've got IPG. You've got the stock is
Data3, right. DTL.
Let's go. Tell me about Data3.
So I guess the same theme as last week. We're seeing a fair bit of strength in the IT consulting companies. Look, it's far from a perfect industry because it can be a bit cyclical, can be a bit up and down. However, I would argue that we're in the midst of a multi-generational, digitization and automation of everything kind of thing. And some of the biggest costs is just like setting these system ups, getting them installed, buying them off the vendors. Obviously, we don't really quite know yet exactly how increased AI will start playing a role in automation and all that sort of thing. I think we've just had a bit of a puff of excitement about it. Not that many real world impacts, to be quite honest, but I think that does give you a glimpse of the fact that computers and technology and software still has further to go in revolutionizing the world. And when it's done, we'll probably just collapse in a heap because of climate change. But the point is these companies should keep on making profits along the way. And I think that the short term and the long term is in favor of these IT consulting companies. Data3, I see it as a historically well-run company and probably a definite potential for inclusion in the ASX 200. So actually, it's really kind of a big deal whether it can do some good results this season. If it does, I really like the potential setup where the share price moves up a little bit, you have a bit more volumes. This starts looking like index inclusion potential. Again, you have funds getting set, and then hey presto, it could usher in a decent, I'm not saying it's going to double, but a decent little run. And perhaps this isn't such a high probability as being a good result as Cirrus was, because Cirrus had already like pre-guided or whatever. But yeah, like I do think that there's a good chance that it's just a real question whether demand has been strong. So at the moment, I think the data is giving this snapshot of an environment where demand for ID services and stuff has still been strong. That's certainly been the commentary by and large. And also you may have a bit of an easing on salary pressures. So job ads have been coming down for a few months now. They're still at massive highs, but the directional change is probably meaning that there might be less. I'm hoping that there's going to be less cost pressures. So that's the theory. I own shares in this one, Peter, but I also own it more for a long-term play than a short-term play anyway.
Yeah, look, it's been a stellar performer really over many years, Claude. So I really like the story. They've been fairly consistent most of the time. And like you said, the management it's got to be given a lot of pats on the back for that. Just looking at the first half was pretty good, record first half results. So I completely agree with everything you say. I can understand why you like it so much and you own it. You've got those runs on the board. So really good story. So thank you for sharing that one with us. I'm going to go with one of our favorites really that we've been talking about. We've actually recently also listed it as a buy for the future. One of the better stories, and it's IPG. Now, the reason why I like this one is probably two-pronged here. First of all, there's a strong momentum with this story. So the chart looks really, really good. So that's one of the reasons why we buy it. And probably maybe you've got an opportunity to buy it once it swings through these, low four region. But the other one thing is the obviously outlook. So I really like the recent report from IPG, just upgrading its earnings pretty much, right? So just talking about that, they're really going quite well. Things are going fairly strongly for them. And I'm expecting once they release the results, and I think the results are talking about that they're going to grow about 35% of memory. Let me just see if I can bring that up so you guys can see it as well. And that was in June. So here we go. So I want to bring that up so you can see what I'm seeing. So that was the guidance FY23 on the 14th of June, where the full year guidance was given of between 27.1 and 27.6 EBITDA and 22.9 to 23.4 for EBIT. And that was on the 22 results, right? So that's around about 35% growth right there. I'm expecting that to actually maybe even exceed it if we're lucky enough. And I know they've recently also acquired a company in Perth, so that's going to add a little bit more for next year. And for me, again, the key is when I've talked about it so many times is that's the change and the move towards the electrification and especially the EVs, right? The electric vehicles where
I agree with you on that, Peter. Like, obviously, we're so early on that in Australia now that might not actually be that imminent because it actually still is so early in terms of EV penetration in Australia. But you can see where it's likely going by looking at other countries, and it is like as not we'll eventually move in that direction. So you've really got that as a future positive. Additionally, that's what originally attracted me to this stock, where it was like half the share price then. And I'm really quite salty that I did actually. This is one that when I was refreshing my portfolio and sold a bunch of smaller holdings, or actually sold pretty much everything. But this is one I should have bought back straight away just because the near-term thematic was good. The valuation's not crazy. Having said that, I think, as you know, and as you've commented yourself in the past, the valuation's probably not so much on your side as it was now. So perhaps a little more concern on that front.
Yeah, look, 100%. I mean, the valuation is probably the only one you'd be going, well, I want to buy it as cheap as I can. And I'm thinking if you are going to do that, stick to the trend lines, right? Trying to buy it as close as you can to those trend lines. And like you said, I mean, look, the interesting point is with this EV stuff, right? You saw the July figures. I'm not sure if you saw it, but the July figures that come out for the car sales, the electric vehicles doubled, right? The sales of it would double again. So you can see we are on the cusp of really adopting it.
Yeah, it becomes one of those situations. It's like if you have that moment where everyone wants exposure to this particular theme, and then there's like 3 or 4 companies that give you that or less, then they're definitely, that's how they could sustain quite a high valuation. Of course, usually roll-ups do fall over in the end. Sometimes they can run for quite a few years though, so you can make real money on them as well. It's just that if you're really long-term buy and hold, they usually don't go on forever because they kind of just run into the law of large numbers and essentially, you know, the price arbitrage they can do disappears.
Yeah.
So, yeah, I mean, tempering it a bit there, but I by and large agree with you on that. Actually, I think we do agree, and I think there's probably a reasonable trade in it, although, you know, being the fact that I'm looking for more long-term plays, I feel like maybe I've missed the opportunity here.
I'm thinking you have missed the opportunity because I think this is still a fairly long term, because especially if this EV plays out over a number of years, right, of the adoption. So they should have a decent enough market for 1 or 2 or 3 players rolling out these charging.
Yeah, and I think roll-ups work better, like the in some areas than others. So where I think I'm very skeptical of them, professional services, for example, like not that much capex required. Guy just gets up, is like, see ya, opening an office next door.
I'm hoping that the EV stuff will carry the load for them.
This has got it's a distribution network, right? You know, they've got warehouses, they've got outlets, they've got, you know, a customer needs to know to call them and go to them, and it's all about, you know, time and range and that kind of thing. So it can work better as a roll up because you can get some real advantages with scale. So I think it works better there. Obviously, software tends to work pretty decent just because if you buy mission critical software that's very sticky, then even if you stop doing such a good job, you lose your customers very slowly. So as long as you pay the right price, it can work in software. Obviously, also the module approach is another way software can work, but I diverge.
Yeah, that's okay. So the stories are, for me, pretty interesting, strong at the moment. Hopefully they will report well. If they do and they come up with a decent outlook that satisfies the investors out there, I'm expecting sort of a bounce. So look, if you're, like I said, if you're interested in the story, just like you are with, I think, DTL, they're both very, very good. I'd be looking to possibly nibble on a few for the future, right? And we already know that DTL is a great long-term story that's done a very, very good job, and they can still keep going, you know, with that performance. You know, IPG is obviously a bit of a roll-up, so I can understand your concerns long-term. You know, is it viable? Maybe not.
Yeah,
maybe.
But I do think it's one of the industries where the roll-up can work for longer. So I think that's actually in its favor. I guess I was just thinking aloud a little. Like, for example, DTL does have, I think, a couple of acquisitions in the past, but it doesn't really grow by roll-up. And that's a good thing because it's like very much in professional services, managed service. It's like very much a people business. So you don't want to be buying a business and then the people just leave.
Yeah, I agree. Look, I agree. So let's see how they do. Let's have a quick now look at some of the markets. Now it's open. If I think everyone's now hit the board. So just see some of the companies that are maybe hitting the boards. And I know that, let's have a look. AXJ. Oh yeah, like I said, it's pretty flat. So not much movement there. The usual suspects are doing okay, and the usual suspects are the stuff that we normally look at. The XRFs bouncing again a little bit. Let's have a look at that. Yeah, that's okay still. Ordinate 990 now. Is there a profit to be taken there? Possibly. Look at that chart's looking very, very good, I have to say.
Fineos up 5% from the looks of it.
Let's have a look at that one. So they're bouncing back nicely.
So we're still seeing a lot of I quite like this one, but as a trade, not so much. I think we talked about it actually recently, Peter.
We have. And no, Obsidian is another one that's, I'm just happy that it's starting to go back up again, right? Because we like the story.
It seems like, today we are getting some volatility on these sort of risk-on names. And I think yesterday they were down. So it's probably, in a way, just bouncing a little bit today for most of them.
Yeah, but it's good. I like it. Look, it's good to see some of our names that we normally follow on the green here. So that's a positive for me.
Yeah, it's generally risk-on. If you're in stocks, you're risk-on.
Yeah, agree.
Which obviously pays off big time when it pays off, but it has been perhaps a little bumpier now that we've had higher inflation and then you got recession fears and stuff. But I guess this too will pass in the end and have a glorious time again.
Yeah, and look at Seek even. Look at that. I mean, there's some of these.
Yeah, like I've said, the tech leaders are still out there, right? Like, look at REA now. I'm like, oh man, I think I missed the opportunity to buy REA when it was cheap. Stop saying
missed opportunity. Never missed anything.
Yeah, you're right. I mean, it can be anchoring, right? But like, think how negative people are on the property market right now. And don't get me wrong, I think that we have problems in this country with the property market. But how's it going to crash if we're just if we're amping the number of people that have come in? Like, people are going to live somewhere, right?
Yeah.
So I'm not saying it's going to keep going up strongly, but at some point the volumes in the property market have got to increase, right? Everyone's holding on because they don't have to sell.
Like $2 million per average house. We can't have that.
Yeah. So I mean, but if it's more people, more apartments being built, more of them getting sold on realestate.com.au, like, I don't see the massive downside here for REA.
Absolutely. All right.
What do you think of the chart of that one, by the way, Peter? You got it.
Which one?
REA. REA.
Well, let's have a look.
Yeah.
Let's have a look. Yeah, very good. I mean, look at a really strong few weeks. And it's funny how it's got a green big candle, then a bit of profit taking, green big candle. It's sort of, expecting similar type. And you're absolutely right. I think this is one to have a look at again. It's trading on ridiculous multiples, but it's a quality story. There's no one.
It's one of those. It's one of those flow stocks. It's like big super funds need to put their money in growth companies.
Exactly. And
there's like 5 of them.
That's right. Yeah, and you just recycle over and over against the 5. All right.
Yeah.
Claude, thank you so much for joining me. Thank you for your idea for the week. And I hope you have a great day, and hope everyone also has a great day, and I'll see you again tomorrow.
Yep. Thanks for watching, everyone. Enjoy your day. Bye, Peter. Thanks for that, as always.
Bye.